I had more resources, I would put them all in the stock market.
Wow.
And from what I've seen, this has been the cycle of investment in
Mm.
people. They make a lot of money in the stock market, buying in low, and then wait a little bit, few quarters, a couple of years, they sell, and the profits that they make, they invest in property. Which is why there's always this lag of a few months between the uptick in the stock market and the uptick in the property market.
Hey guys, so David Leechiu is back in the podcast, and for this video, as you all know, over the past few weeks, we've been doing a deep dive on REIT because this is something that's very, very new. This is an investment that has been in other countries for the longest time, but for the Philippines, rightly so, that it's good that we do a deep dive on what REITs is, the basics, the pros, the cons, so that as we see more REITs coming out in the future, you guys have a holistic approach and you know what you're getting into. And I know I've done a lot of videos, but it's coming from a stock market guy's perspective. I'm, at the end of the day, still a stock market guy. I'm a paper assets guy. I have my analysis from the lens of a stock market trader and investor. And as you all know from the previous videos, I've been mentioning that REITs is, at the end of the day, a hybrid between the stock market, derivatives, and the real estate market. So I really believe that David Leechiu is the guy to listen to in all of this, because I've been saying this over and over. David Leechiu is one of the greatest minds when it comes to real estate investing. When David speaks, people listen, and I'm sure you will get a lot from this. What can you expect throughout this video? David Leechiu giving you the benefits on why you should invest in real estate investment trust, the upside of it versus buying traditional real estate, buying your condos, your apartments, your raw land. Then I would drill in and talk about what are the things that you should look for to signify that this is a good REIT. Then we talk about buildings versus buying land. Then we also talk about why is the Ayala Land REIT just the buildings, not the land. It does not include the land. You're just buying the company that owns the buildings. And lastly, what should be your portfolio mix? If you are an investor, what percentage of your money, what percentage of your portfolio should go to REITs, and what percentage of your portfolio should go to traditional real estate assets? And this is what I like about this video, because we're giving you different scenarios, different perspectives. How does REITs look like from a real estate expert? What is REITs from a perspective of a real estate expert? So if you guys are excited, comment I'm excited, comment I want David, and let's go. We have two new REITs coming out, one from Ayala, then another one from Double Dragon. And since this is something that's new to the Philippines, but I've been investing in REITs in Singapore for the past 7 years already, and it's amazing, from data centers to hotels. It gives you exposure to the income from that. I want to know your take on it, and then what's your analysis on it, especially for people who are hearing this for the first time, because it's a hybrid stock market slash property rental income.
I'll put it this way. If you had 5 million pesos, okay, you can buy a studio, and then when you own that studio, you have to either own it with your spouse or your siblings. And when you do that, you have to have unanimous decision. Number two, you have to start paying KUSA. You have to start paying power bills, water bills. You have to start paying other kinds of dues. Then there's insurance. Then there's real estate tax. And that's just owning it, owning it. Wala ka pang tenant nun. You haven't leased it out. Then you have to hire a broker or somebody to help you find a tenant. And while you're looking for a tenant, you have to put in your microwave, your washing machine, your aircon, your bed, your dining table, your sala set, which is fine on the first year. You're so excited. Oh, I'm a designer, blah, 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 right? But after 3 years of doing that, you're going to say, what the hell, this tenant is never happy. You know, he wants me to fix every leak, wants me, the toaster is broken, siya naman yung gumagamit, but I have to change it. When that tenant leaves, you then will lose months looking for another tenant and to replace the stuff inside. And then, in addition to all of that, you are subject to VAT and income tax. Okay? Assuming you pay your taxes, and please, if you want to help the country, please pay your tax. And then you have to hire, ultimately, when your portfolio starts to grow, you have to hire more people just to attend to those properties. And then when you sell it, depending on the time of the market, when you sell real estate, the taxes are based on one of the higher of three things: zonal value, market value, or transaction value. Your transaction value might be lower than the zonal value or the fair market value assessment of the BIR. It doesn't matter. You are going to pay tax. So what looked like 6% capital gains tax on paper could look, in effect, 12 to 30%. Or you can do all that with your 5 million pesos, or you can just say, you know what? I will just invest in the REIT. And you know what? With one click or one phone call, you're in. With one click and one phone call, you're out. I don't have to bother about maintenance, toaster ovens, beds. I don't have to bother about tenant renewals, etc. Because Ayala and Double Dragon are going to do that for me. And you know what? They're obliged to dividend all the earnings, or not all, but 90%.
90%.
90%. And when they do that, they are income tax exempt. So all you have to do is pay dividends tax of 10% flat. You go in, you go out anytime you want, and without the hassle, operations, or taxes. And it will be the cheapest, most efficient way to own real estate. If that is the case, why do people still buy real estate? Because real estate has an allure of owning, an allure of saying, wow, if I brought my girlfriend here and I propose to my girlfriend, okay na. In Singapore, you cannot marry someone, you will not be able to find a girlfriend or a boyfriend without owning a condominium unit. That's one of the C's.
If you were the person who would want to analyze a REIT, what are the things that you would look for to know that this is a REIT that's worth looking at?
Diversity of tenants, high quality of landlord, high quality management, and governance.
What's your take on the rental yields? Do you think that since rental prices are just going up at any price that they come in at the listing, they can expect yields also to continue to go up as well?
I think they have long-term contracts, and so the yields should be steady. So the benefit of buying the stock in the REIT is you get capital appreciation and you get dividend flow. Capital appreciation will be high because people will say, wow, that works pala. And when the prices of these two stocks will rise, everyone else is already at the starting line waiting to go. They're just letting these two companies go ahead and see and learn from that before they come in with their REIT.
Last question on the REIT. I haven't seen the specifics of the Double Dragon REIT, but for the Ayala REIT, it's 3 buildings: Solaris, McKinley Exchange, and one more building in Makati. But they only included the buildings, not the land. What's your take on that deal? Because I think that if the land was included, the appreciation would also be faster as well.
The only way you can make those deals happen is by not including the land. Frankly, you don't need the land to generate the income. By leasing the land, you don't burden the balance sheet of that REIT. Then it becomes a yield play.
Do you have a suggested mix for, I have this much already on hard real estate assets. If I want to diversify into REITs, what's a good percentage that they can put into this more liquid investments?
A fair thing would be to have 50% real estate, 50% stock market.
Got it.
Stock market don't always have to just be REITs. Could be other stocks.
So I hope you guys got a lot from that video. For me, it was very, very insightful. It gave a lot of information that from a stock market trader's point of view, whoa, he made sense. It was right. It was good. If you guys got a lot from that and you guys got a lot from what David said, comment I'm learning. But above and beyond that, if you want David back, send in your questions. Put in your questions. What are the things that you want to know more about REITs? What are the things that you want to know more about real estate investing, or at least the listed companies connected to real estate? Put them in the comment section below, and we're gonna try to invite David over back again sometime in the future if the comments and the questions are really, 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 really good. By the way, if you're new to this channel, my name is Marvin Germo, and I make daily videos on investing on the stock market with one goal in mind, to give you enough information so that you can decide on your own so that you can decide, is this a good investment for me or is this something that does not fit me? At the end of the day, I've been doing a lot of videos about REITs, but please remember this. It will be up to you to decide whether this investment is for you or it's not for you. It's your decision, it's your money, it's your responsibility. It has to be you who should do the analysis whether you should come in or not. No one person can make that investment for you. No one person can make that decision for you. And I may have presented a lot of the good things about it, but we've also presented some of the cons about it. And you need to weigh it. Is this an investment that fits me or not? If you enjoyed all of this, appreciate it if you can like, share, subscribe, so that every time videos like this would come out, you get to see it. And more Filipinos will be encouraged that we are raising a new generation of Filipinos that are investing. Because I really believe that it's time for more and more people to be invested. I really believe that in this era that we are in, it's time that we just don't talk about TikTok. It's time that we just don't talk about entertainment, about politics, but we need to put personal finance, investing, entrepreneurship in the forefront. And that's what this channel is all about. So I hope you guys got a lot from this, and I hope to see you soon on our next video. Marvin Germo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.